Hello and welcome. You're watching the weekly edition of Your Trades on ET Now with me, Sneha, and with me is Priyanka. And Priyanka, well, we can't say we had a bad trading session today because we've managed to end Nifty in the green on Friday's trading session. We did see quite the spike coming in the last 15-20 minutes of trade, but we did not manage to hold on to that. However, we've ended above 22,500 at 22,530, so that's a good end coming into the Nifty on Friday's session. Sensex also up 0.1%. Nifty Bank, real winner once again. Remember, in Thursday's session also Nifty Bank outperformed, and even in Friday's session 0.6% up is where Nifty Bank is at. And also let's take a look at India Wix, because earlier in the day we did see 5% cool off coming in over there. Very good moves coming in, but however India Wix has also ended the day with a spike of almost 2%. So on intraday basis you have 6 or 7% higher. That's where India Wix is spiking at 24.6. There you have it. That's where India Wix is ended the day as well, very dangerously close to 25 levels. But when you take a look at the sectoral moves today, Nifty snapped for session losing streak. Adani Enterprises and Ports led the recovery in Nifty. However, Nifty Realty snapped its 3-week losing streak. It was the top sectoral gainer, led by Macroeconomic developers and Prestige. Nifty Metal was also up 2%. Jindal Stainless led that pack. Nifty PSU Bank also snapped its 3-session losing streak, and you had Union Bank and Canara Bank that was leading all the cheer when it comes to PSU banks. Nifty Bank, like I mentioned earlier, advanced for the second session, and AU Bank and Punjab National Bank were the real winners on Nifty Bank today. However, you had Nifty IT that continued to decline, fell for the fourth straight session. It was the top sectoral loser today, dragged by Persistent and Infosys, and Nifty Pharma also closed in the red. IPCA and Alchem dragging the most. But when you take a look at what happened this month, right, because well, we're at the end of this month and Nifty hit the psychological mark for 23,000 for the first time, but we have cooled off significantly from those levels. Mid cap has hit a record high. Small cap has, however, ended this month in the red. Metals has gained over 5%. Auto has hit a record high this month. Auto has advanced for 7th straight month, which is the highest selling that we've seen, or the longest buying streak that we've seen in the last 7 years. Very stellar moves coming on Nifty Auto, and also an index to watch out for on the back of the auto sales numbers that will be trickling in. Realty has hit a record high. PSU banks, however, have snapped down. IT has declined, and Nifty Bank has also snapped a 3-month gaining streak on a monthly basis. But well, yes, while that was the lowdown, we have lots to watch out for when it comes to the next few coming days, because you have exit polls, you have the election outcome coming in. Next week, you have the RBI MPC policy coming in. You have lots of important data coming in. PMI manufacturing data will also be coming in, and well, basically that is what the lowdown looks like on D Street for the month as well as for the week that went by.
Let's hope, let's see that what ends well, and let's see that maybe we are about to see a new start, because you know the kind of short positioning by FIs we've seen, maybe there's a room for short covering, but then the very well compiled for the entire day, Snehi. But then I'll like to take some more data points ahead in terms of weekly data. Indian, of course, there were 5 straight session of losses, and today was a day when we managed to close in green. Nifty was flat for the whole week. Mid cap and small cap, broader market were at the losing side. Mid cap lost more than 1%. Small cap was the small cap lost more around about 1% here. But then VIX is nearing its 2 years high. Though the volatility bout, which is like a move of 7%, is not very significant, but then way you said that it did cool off also a little. So that actually helps in sentiment. But PSU was the only sector throughout the week which managed to close in green. Rest all the sector have closed with the losses, wherein IT and metal have lost the most, and that to be on a very contrarian note when we know that the Nasdaq has already crossed 17,000 level for the first time. That's a record level for the Indian domestic market. Like the Indian IT sector is on its move. Energy, FMCG, they were the biggest draggers after IT, losing more than 3%, but the gainers were clearly from the FMCG pack, pharma pack, and of course there was a positive news, as in we know that on Indian companies will be beneficiary because of shortage of drugs. We do see a US market visibility for Indian oriented companies, and hence there were many gainers. Divi's Lab has been rising ever since we saw its good set of numbers, and it was the top gainer for this week also. Second top gainer on Nifty was Hindalco on the move, of course, because of the Novelis IPO coming ahead. Adani Ports, in fact, today also we saw the entire Adani pack in green, and in fact strong greens, we'll say. The entire Adani pack stood tall today. Ashok Leyland from mid-cap, wherein post the numbers, we saw a good surge, and this was the highest gainer in mid-cap space also. Jubilant and of course Paytm on the news of maybe Vijay Shekhar Sharma possibly acquiring a stake in Paytm. But then at the loser side, we did see a lot of energy names also, apart from IT Tech, Mahindra, Wipro, and of course names like ONGC. And there were a couple of pharma names also like Alchem and Ipca Lab. But then two important news which came in on the front of high frequency data. One, GDP forecast. Goldman Sachs increased GDP forecast for India this week, and of course S&P also they also reaffirmed their positive outlook with the rating upgrade. And this is, let's not forget, S&P is one of the big agencies which is looked upon apart from Fitch and these are the three big agencies, and when they share an outlook on a country like India, of course, the world takes a note of it. This was a whole week in a form where we are now ending at a position wherein there's a heavy short built up by FIs. What do this means ahead now? We have Santosh Meena joining in, Head of Research, Swastika Investment, to tell us more on the technical front. And we do have Mahantesh Sabarad, independent market expert, to talk on the fundamental side of the story. First, gentlemen, a very warm welcome. You're on ET Now on Your Trades. A pleasure to have you both. Santosh, it's our first interaction with you also. But first, tell us about the data point. The data point which we saw yesterday, and of course, two kind of data points came in this move in this week itself, wherein we saw that FIs, after 14 years, they turned net long on index. But later, the kind of data which came yesterday, is that what it looked like a hedged position? What are you making out of it? Because they're closing the week, and of course, they're closing the monthly expiry ahead of outcome with a heavy short built up.
Priyanka, first of all, good afternoon, and thank you very much for inviting me here. It's my pleasure to be at ET Now. So yes, very interesting data, because last week FIs reduced their short position from record low and turned positive, but suddenly yesterday they again turned record short positions. So interesting. But historically, if you look at the trend for last one and a half year, they failed to catch the trend, because whenever they are heavily short, and any series which is started with such kind of short position, after that we saw a massive rally in the Nifty, minimum of 1,000 points. So there could be case of another 1,000 and a 1,500 point rally from here. Again, if FI remains short, so there is a case of short covering rally. Market is heading into event on very light note, and because there is no euphoria in the market, and there are a lot of shorts in the system, so there is a good chance of a short covering rally from the here. Yes, if FIs are sensing something wrong, and if it plays out, a good thing is that then market will remain hedged. We won't see any knee-jerk reaction because there are shorts in the system. But if they go wrong and market get any positive surprise from the election front, then we may see a short covering rally in the market.
Thanks for that view coming in. Mahantesh, welcome to the show as well. And let's talk about the biggest event that's going to be taking place next week, other than the policy outcome. Of course, you have elections. And earlier this year, we had experts join us and tell us that the election seemed to be a non-event of sorts, because the street had predicted what the outcome is going to be like. But over the last couple of sessions, we've seen that it's safe to say this is nowhere near a non-event, because the kind of volatility that we've been seeing across the market is too high. Tell us what your strategy would be going ahead, at least into next week. How does one position their portfolio in order to shield from the volatility that we could see on the 4th of June?
So firstly, the volatility is very high. You can see the VIX numbers are very high, touching 24 or number. That tells you that the market is not too happy about the outcome that will come. When I say not too happy, it's an outcome which is going to be quite risky. Having said that, the strategy therefore would be try to remain as liquid as possible to take advantage of the upcoming volatility, because a lot of stocks will swing up and down in this phase when the election outcomes start coming in, particularly with the exit poll coming in. That being the case, The first instinctive reaction for any investors would be to build a portfolio and grab those opportunities where stocks have fallen quite a bit. As it is, we have seen that the recent performance, and I would look at the performance from the start of the calendar year, the recent performance of the market has not been too great in terms of rise. It's been flattish. And therefore, you can find good opportunities in the market by remaining liquid. The second bit of strategy one can really take or look at is try to diversify your portfolio as much as possible because post elections, whenever the new government starts to form, there will be new policy directions that you can see. Even if we assume that the current government will be able to continue into the new term, then too we will see a distinct policy shift that could come in favoring certain sectors. So that being the case, diversification can help you better weather the storm ahead.
All right. Okay. That's the view coming in. But then let's understand that how to approach the markets in terms of buying from here now. Santosh, what should be the strategy one should adopt on Monday morning, understanding that Saturday we have the exit poll with us and Monday market starts to reacting on it?
Yes, now it is difficult to say, but if market events remain favorable, then we can expect a gap up opening. After gap up opening, there will be risk if even BJP comes with a majority, there will be risk of some profit booking if we look at that 2019 outcome. So ahead of the actual outcome, market rallied after exit poll, but on the day of actual results, market witnessed profit booking from the higher levels. There could be the case, but I believe even after some pullback, Nifty and Nifty and large cap stocks may continue their momentum, but we may see profit booking in mid cap and small cap counters because there is a concern of valuations and this space is little bit overheated, so there will be risk of profit booking in mid cap and small cap space. But if FIs will come, then large cap and Nifty will outperform from here.
Thanks for that view coming in. Mahantesh, let's get a little sector specific and assuming that policy continuity is something that we do see when the outcome comes out on 4th June and the current government is set to continue. What would the sectors be where you are bullish on? Let's say the impetus towards manufacturing, PSUs, defense continues. Do you think these would be good additions to the portfolio? And if yes, how would you be playing these themes?
Actually, the capex theme is something that will really work. Capital goods and industrial goods kind of companies will stand to gain because the current government continuing would mean the capex theme will be quite strong. As far as defense, PSUs, and related entities, government entities are concerned, I'll be a little more careful because defense companies are too expensive, and PSU companies have done really well in the recent past for them to really do any incremental gains here in after. So capex is something that I will play. Capital goods companies is what I would look at.
Okay, capex heavy sectors and stocks that you're indicating here, but then understanding that FI flows will remain volatile. They are at short. There are 12 years of short. What is the sector-specific approach one needs to adopt here? We'll get you all the inputs. Santosh and
Mahantesh, continue with us both on the other side of the break. Yes.
You're watching Your Trades as a weekly edition that we're doing, and Santosh and Mahantesh both are with us. Santosh, tell us now which are the stocks that are made to your radar, where you see a direct recommendation.
Yes, two stocks on my radar. First is Coal India. The stock is very bullish. The stock is in strong bullish momentum. After some consolidation, it saw some kind of pullback, and after pullback, it took support from recent breakout level. Now we may see further momentum in the counter. So 525 should be your target, and keep a stop loss of 472. Another one is Hero MotoCorp. Another strong counter. Strong bullish momentum. It is consolidating at 52-week high, and during a small pullback, it tested its 20-day moving average, and now again it may resume its bullish momentum. So 5,300 should be your target, 5,000 should be a stop loss.
All right, Santosh, thanks for those picks coming in. Mahantesh, I'll come to you again and help us understand the kind of outlook that you are forecasting for Q1 of FY25 when it comes to sectoral performances in general, because we've just wrapped up the earnings season and it's been a mixed scorecard across the board. Across Nifty companies, at least 17 companies have beat expectations, 18 are in line and 15 are below. So pretty, sorted out, pretty evenly distributed results we've seen this time around. So give us your outlook for the Q1 earnings and sectoral performances, especially across the board, like FMCG, where rural recovery has been seen. You have realty that continues to go ahead. So give us a general consensus. Do you think it could be better than what we've seen in Q4 this time around?
So as far as Q1 earnings are concerned, the most important event to look forward to is the monsoon, and monsoon will feed into substantial growth as we go ahead, particularly on the FMCG side. It will also mean that PSU banking space will see growth in terms of loan disbursals and so on and so forth. So Q1, unlike the Q1 of last year, which was a year which was growing over the base effect of COVID disruptions. This time around, we will have a far stabler quarter and an enabler quarter, which will get into volume growth for FMCG. Consumer discretionary spend should be better, and the usually underperforming IT sector or pharma sector will start recovering. So I guess Q1 should remain stronger than usual that we have seen in the past 3-4 Q1s.
Okay, Mahantesh, also tell us that how do you make of the cues coming in from the macro front? Because we saw that there was no follow-up gains from US markets last week, and bond yields are also rising up. There's a very important crucial data which is coming in today on Friday also, and understanding that there are again some jitters about rate cut being pushed to further months now. What are the kind of cues one should expect or we should be prepared for coming in from the macro front?
In fact, as far as the US market is concerned and the overall rate situation, interest rate situation is concerned, I tend to believe that the Fed will continue its tightening cycle, but will bring in the necessary rate cuts. Inflation is, I would reckon, quite under control right now. It's only a bit of a push that is required for the inflation to really start falling, and that push can potentially come from global commodity prices easing. So I foresee rate cuts happening into the year ahead by the US Fed. The only risk event is the presidential elections in US that could upset the rate cut cycles, and that is what is I believe is currently getting built in the market by expecting that the rate cuts will be pushed further out into the future.
All right, Mahantesh, thanks for that view coming in. Gentlemen, with that, we're at the end of this weekly edition of Your Trade. Santosh as well as Mahantesh, thanks so much for taking the time out and joining us with your expert view on the technicals and on the fundamentals, especially into what we can expect going into next week. Since, Priyanka, we have so many events lined up for next week.
The biggest one is, of course, which is coming on Saturday evening. And that, of course.
Well, all right. So with that, we'll wrap and let you go, both you gentlemen as well as our viewers. Thanks so much for watching. This was Your Trades on ET Now.
If you like this video, then like, share and subscribe to ET Now.